What's going on, everyone? So we're going to take a look at the overall stock market. I'm going to take a look at the NASDAQ 100, which is your big tech and mega cap stocks. I'm going to look at S&P 500, and we're going to look at a couple of individual names, right? So, if you've been trading for the past, this past week, you're kind of understanding, price action is not the best, right? We are not getting these big expansion moves. Price action could be a little bit choppy. You're looking around on your watch list, you're seeing one or two names kind of really exploding and just kind of holding the high range from either the gap up or the initial opening range. And then you're seeing a bunch of stocks just going sideways, or a bunch of stocks just kind of floating. That's never really a good sign. Now, that doesn't mean that the market is going to continue to pull down, but it is a little bit of a warning sign that maybe we are going to be coming back on a potential back test. And I want you guys to kind of see something here, right? So the bull kind of case, the bull scenario is not out of the woods until the S&P 500 and until the triple Qs start closing and building below the 50-day moving average. Okay, so for the triple Qs, on example, that is not until a price of 285.60. Okay, so the bulls don't really have too much to worry about until we start to lose 285.60. That is what it is. Now, are we going to get down to 285.60 is what we're going to kind of dive into and see what needs to play out so we can be on the right side of the trend and the right side of the trade when these expansion moves happen. Now, what happens a lot with newer traders is they start to take too many trades in a market that we've had for the past week. They start to chop themselves up and die a death of a million cuts. And what that means is you're looking at the market being open and you're looking at trying to just take moves because the stocks are moving. Guys, the stock market is open every day, right? 5 days a week. As soon as the market's open, stocks are going to be going up and down. That doesn't necessarily mean that you have potential trades just because the market is open. So I'm going to speak to options players and I'm going to speak to equities players, which equities, if you don't know what that means, then you probably haven't been trading that long. It just means shares, if you trade shares, right? So if you're an options player and you're finding yourself getting chopped up or losing money or not making anything or not being able to find a trade, it's because the ranges are contracted. This is not your fault. This is not, the market's fault. There's nothing wrong. That's just where it is. And it is what it is. As an options player, you need expansion. You need big channels. You need big potential. Okay. Because if you don't have big potential where a stock can stretch, those premiums aren't going to move. The stock's going to move up 30, 40, 50, 60 cents. Your options contracts are going to go up a little bit. And then when we pull back or whether we bounce, depending on if you're playing long or short, those options premiums are going to get eaten up and then you're going to start losing money. Okay. And then you're going to stop out. You're going to do it all again. You're just going to constantly cut yourself over and over and over. You need to have big moves. So if we kind of look at, you ask yourself, hey D, why do you have so many fucking lines on your chart? Now, there's a good reason why I have so many of these supply and demand zones. Okay, the reason why I have all of these supply and demand zones, which all these moving averages, these bands, these channels, is because potentially I want to know where the stock is heading and where it potentially can go. Now, if there's no room in the trade for me, I have to ignore the trade. I don't care if the stock is going down and the market is selling off. If there's only 50 cents in the trade and I'm looking to trade options, there's no room there for me. Now, if we break down a level of demand and there's $2, $3, $4 before our next area of demand, now that's something where I'm going max size and I'm going to hammer that trade and I'm going to rip that trade's freaking throat off, right? And that's how you have to look at it. You can't sit there just because you get an intraday setup according to your strategy or whatever strategy you're using and think that you're going to take every single one of those trades if there's only 30 or 50 cents in the trade and you trade options. It's just not going to happen. You're just not going to make any money. I'm willing to bet that you're going to lose more trades than you're going to make, and you're going to lose bigger amounts than you're going to make. So make sure that you know your levels. Now, if we kind of look at where the triple Qs are at right now, I don't really like this close. 290 to me looks like where we're heading. Okay, so if we kind of look at where we closed today, we closed back below this LR50 channel here, and we kind of closed right at yesterday's lows. Okay, so if the bulls don't do a hell of a job in the pre-market and right off the open to sort of reclaim this channel and start pushing back over 296 and 297, we will see 290. Now 290 is the 50 EMA as well as this 200 SMA. Okay, this is potentially where we could be heading for either a potential bounce and now these channels start to open up, or we consolidate here for 1 or 2 days, and next week we start to lose this 290, guys. If we really start to lose this 290, look how much space we've got, right? And what do I like to talk about? Am I going to take a short position from 290.81 at the 50 EMA down to 289.95? No, there's no room in the trade. You have to have room, right? But would I be willing to take a trade below 289, 290 when I have a maximum potential of $5 here at 285? 100%. So this is where you need to identify and be smart with your money, and not just trade just for the fact of trading. That is, if we lose and we do close below 290, it could be a risk on situation where you look for that expansion channel on a lot of names, and including the triple Q's index, to get down to this 285.78, which is a 50-day moving average. Now, if we lose this, we'll have another video and another discussion as far as where our next potential is. But if we do come down into this area, for example, let's say we gap down tomorrow into this area, and then we kind of hold this area and start to go red to green, then I would look for this to stand and look for us to get back over the 5-day moving average here to potentially push back up into 296. But again, we are not going to get any ranges. We're not going to get any big movements until we reclaim about 298 and 300. Okay, until the triple Q's can get back over 300, that's when you're going to see ranges kind of expand. Now to the top side, now if we get, you know, the close below 290, that's when you're going to see ranges and stocks really start to dramatically expand, and you're going to get that fast price action. You're going to get $2, $3, $4 trades versus these 30, 40, 50 cent trades, right? So if right now you're looking around, you're like, man, why do I get into a long or a short and it's only going up or down 50 cents, 80 cents, and then it comes right back and then I'm losing money? Because the ranges are contracted. You know, in a normal market, when the ranges are not contracted and we're in big expansion channels, you're going to get, instead of a 50, 80, 60 cent move, you're going to get a $2, $3 move on the stock, right? So you have to understand where we're at in the chart. Now, we could still break out to the top side. Like I said, if the bulls really start to reclaim the 299, 300 area, this is going to be a breakout of the past month, right? This whole month we've been just slowly declining, putting in lower high after lower high after lower high, right? We're going to really need to get back over 300, and this is when our big trade's going to come, because we have room all the way back into 313, and then now to start putting in these new highs. In my opinion, though, the market doesn't feel like it's going to do that right now, right? You know, it could, but it doesn't feel like it, because we're getting stocks that are moving up, and it's like today, for example, Meta was a fantastic trade to the long side that I actually took. I took it 1-2 supply zones higher to start taking profits, and it ended up going three supply zones higher and just absolutely destroyed all day, right? When you look at other stocks like Nvidia that really haven't taken out their earnings highs yet, they're kind of just going sideways and sideways and sideways, and then towards the end of the day kind of started to sell off back into their levels of support. I need to see Nvidia get over its earnings highs. Get over its earnings highs, and we're talking about 240, 242, 245, right? We need to see aggressive call buying coming, and we're not really seeing that. The only kind of stock a bit from the big names that I'm looking at that's getting aggressive call buying is Tesla, but it's only because we have investor day tomorrow, and that's a lot of speculation money. You know, to move up 10 to 15 points on that move could easily be a 10 to 15 point drop. Market makers do have a 14 point kind of up or down move on Tesla priced in, so we could be looking at a big 10 plus move on Tesla this week, or we could be looking at a $10+ move on Tesla to the downside. Again, just because market makers have priced in around $14 doesn't necessarily mean it's going to be to the long side. It could very well be to the short side, but I can tell you that bettors are betting heavily that it's going to be to the top side. But again, they could be trapped and lose all of that money. Again, you know, if you don't really have, you know, if you're not a big options player, you don't really understand what I'm talking about. But if you are trading shares, what this is a cash flow market. So those, I'll just use one lot as example. So if you do get 30, 40 cents, take your money. Just take your money, because I'm going to tell you this, you will get those trades where instead of taking 30 or 40 cents, you're going to get $2 or $3, right? But if you can constantly train your brain to take cash flow, we don't do this shit for free, guys. We don't sit here at the computer and watch these charts for free. This is your money. So if you get it, take it, and understand that when the ranges open up, they're not going to be 30 and 40 cents. It's going to be $1, $2, $3, and you're going to be able to stack these wins a lot faster. A lot of times people are getting into these trades, especially I'm seeing it all day on social media, especially on Twitter. guys are taking trades and they're getting stopped out, or they're holding down $2 or $3, and it's like there's no reason to do that. There's no reason to hold on to a losing trade, okay? Especially if you can day trade. Now, if you can't day trade and you're trying to trade a small account, I have no idea why, right? I have no idea why you're trying to trade a small account. One, do not trade a small account. Just don't do it, right? If you don't have the money to trade and be able to take multiple day trades, I'm going to recommend two things. If you're an options player, I really wouldn't recommend new traders to trade options, but if you are going to trade options, make sure you're on a cash account so your funds are going to settle overnight. So as long as you have money in your settled account, you can take as many trades as you want, right? It doesn't really matter. You don't have to worry about only 3-day trades. Now, if you're an equities trader and you can only trade 5-10 shares of Tesla, you're not really going to make too much money. But I would recommend go out. There's prop firms out there. I work with a fantastic one. If you guys want to, you can get funded, 6 figures and go trade capital for a firm. As long as you know what the hell you're doing, as long as you know good risk management and you have a strategy, there's people, there's firms, there's investors that will give you money to trade, right? As long as you can make money, they will give you money to trade. As long as you're not stupid and blow up accounts just being dumb by gambling or doing crazy outlandish shit that you see on social media, you can get funded with these firms and leverage that extra capital, right? If you want that information, hit me up in the comment section. I'll get with you and I'll put you with a broker and a firm that I use that allows you to day trade Tesla and Amazon and the NASDAQ and S&Ps or Apple, whatever you want to trade, right? But that's another case in point. So that's what we've got here on the triple Qs. Now let's quickly take a look at the S&P 500. We can see the S&P 500 today is the first close below the 50-day moving average. So like I said with the Qs are not there, but the S&Ps are. Now, if we kind of look at what's going on here, we're down about another dollar here in the after hours. We've got this last 200-day moving average sitting at 393. The bulls absolutely need to hold this, okay? We can't have 2 or 3 days here trading below the 50-day moving average, start to close below this 200-day moving average. Because if the bulls really start to give up 393, 391, look at how much room down, guys. Look from 391 all the way down to 381. Where do you think we're going if we start to lose this 200-day moving average? We're already below the 50. So if you believe in the idea of supply and demand, because I know there's a lot of traders out there that maybe necessarily don't have all of these lines and moving averages and channels on your chart, but you guys are quote unquote price action traders or supply and demand traders. So what happens when your stock loses its area of demand, right? Answer the question, what, in your head or aloud or whatever to yourself. If your stock that you're watching, you have your demand zone, you have your supply zone. If a stock loses its demand zone, where is it going? Potentially to its next area of demand. If a stock breaks out of supply, where potentially could it be going? To the next area of supply, right? So you need to be, if you're a breakout trader and you're buying the breakout, you're waiting for a back test, or even if you're taking the first initial move, you're taking profits into the next area of supply. If you're shorting a breakdown on through demand, as soon as it loses demand, whether you're taking the first entry or waiting for it to lose it, back test, and then kind of drop again, where are you taking profits? At the next area of demand. It's the same theory with what I have going on my charts. So if you kind of look at, if we'd lost the 50-day moving average today, and this is an inverse hammer candle, where is the next potential landing spot? Our next supply, our next demand zone. That's this Bollinger Band as well as a 200 sitting at around 393. Now, if we do start to close below 393, then you can see here our next area of support, which is the last support for the bulls, is 390. So anything below 390 could take us all the way down to 381, and that's going to be your expansion move. So I do not want to hear, especially people that follow me or in my Discord, I do not want to hear you guys saying that if we lose, or I do not want to hear you guys say that if we lose this area here, that you're getting chopped up, that you're trying to bounce stocks. Guys, if we lose 390 on the S&Ps, 391 on the S&Ps, we are completely 100% short biased. We are going to ignore the pops and we're going to be shorting those rejections off that supply zones to come right back down, because we've got a lot of room here. I'm not going to try to bounce a stock long trading below all macro levels of supply. That's insane. So just kind of keep that on your watch list and on your charts. Now, if we do get some sort of gap down where we kind of come into 393, 391, and then we start to bounce, you know, the Qs are going to really need to get back over its 5-day moving average at 397. But the Qs are really not going to start to open up until they get back over 400, right? 400 to 403 and over 403 to 407. And realistically, you're not going to really see big moves and big continuation where we can go risk on and swing trade for 2 or 3, 4 days until the Qs start to reclaim 407. Until the Qs get over 407, this is a cash flow market. What does cash flow market means? That means that if you get 30 cents, 60 cents, 90 cents, take your cash flow, leave a runner, move your stop loss to break even, and keep rinsing and repeating that cycle until we start to close below this 393 and 390. We have a cash flow market to the downside. So if you're going to take a short setup and you get 50 cents or 60 cents, condition your brain to take profits. You cannot go broke in this market by taking those small gains, because the big $2, $3, $4 winners will come, and they are going to come very, very quickly. I would imagine within the next week to 2 weeks, we're going to start to get those big expansions, and either we're going to get big expansion trend back up to the upside, or we're going to get a big expansion trend to the downside. It doesn't matter. Again, I do not want to hear day traders complaining about the market being rigged or about this, that, and the other. If you're a true day trader, it does not matter if stocks are going higher or lower. If you are an investor, now we can talk about you want stocks to continue to go higher. Again, you don't have to be a bull and you do not have to be a bear to be a day trader. We're just trying to take advantage of channels that we can work with to make $1 here, $2 here, and when they start to expand, those 3, 4, 5, 6, 7, 8, 9 multiple day runners, right? So with that being said, I hope you guys liked the analysis. Subscribe to the channel. Also, if you guys are looking to learn how to trade and use the supply and demand zones like the way I do, join Evolution Traders. You're going to get access to the online community where I'm in there kind of doing intraday commentary and calling out levels in real time. You're going to get to trade with other traders and ask questions and do whatever it is that you need to do to help you become more profitable. I'll see you guys all in the next video.